This session is about PayFi, the next use case of DeFi. And so why are we talking about PayFi? Well, when you look at payments, they have really evolved tremendously over the years. We started with barter, then cash payments, then came the card networks. Now we even have alternative payment methods, digital payments, mobile wallets, cryptocurrency transactions. And yet, if you look at all of these, what I would call traditional payment systems, they still involve a lot of intermediaries. There are lots of intermediaries required to bring a payment from point A to point B. And because of these intermediaries, you can see costs rising up, settlement times lengthening, and then cross-border payments can be also very complicated. So this is where the promise of PayFi comes in. And to think about PayFi, like think about cryptocurrency payments 2.0. So it's really about building on the existing cryptocurrency payment infrastructure to create a payment experience which is more intuitive, which is compliant, which is consumer grade, merchant grade, and which is globally accessible. So to discuss this topic today, we have an amazing panel of world-leading experts on the topic, and I'm going to let them introduce themselves, starting from Charles here.
Hi, Charles from...
Maybe you need can we hear you?
Can you hear me? Or?
Yeah, I think we can hear you.
Charles from MiniPay. MiniPay is an Opera browser product. MiniPay is basically a global dollar app that's bundled into our popular browser. Especially in Africa, we've crossed over 6 million wallets now, and essentially we allow people to come in and out of local currency to stablecoins and use those stablecoins with phone numbers. So kind of a similar app to Venmo, global cash app, global M-Pesa, and really trying to connect it all with the local payment systems.
Great. Ragulan?
Yeah, hi, my name is Ragulan. I'm founder and CEO of Cast. Cast is a stablecoin neobank, and been going for about 9-10 months since launch. And yeah, we're trying to build, I guess, the US dollar banking experience that most people have in financial centers, but built on top of stablecoins. And yeah, previous to Cast, I used to run the Asia business for Circle.
Good afternoon, everyone. My name is Mayank Singhal. I lead financial partnerships in Europe for Circle. Circle is the issuer for USDC and EURC, which are dollar-denominated and euro-denominated stablecoins.
Nice. And I'm Ahmed Zifsaf. I lead crypto partnerships at Worldpay. If you haven't heard about Worldpay, Worldpay is maybe in the bucket of the intermediary in our traditional payments sort of ecosystem. So within the crypto space for the past 10 years, primarily offering crypto exchanges and companies access to traditional payment methods, APMs, all of those sorts of things. Now pushing a lot more into the crypto native space. So what does it look like to settle on chain if you're a Hyatt or Marriott or any of these large companies around the world? We're sort of helping guide them along with some good partners like Circle on how to get more of your payments on chain, accelerating settlement of funds, things like that.
Fascinating. So we'll have an amazing coverage of the topic today. So let's start by further defining PayFi and using concrete examples. So maybe all panelists, starting with you, Ahmed, can you give me examples of a PayFi product that you know and love, that's successful, and how it differs from traditional crypto payments?
I mean, when I think about PayFi and defining sort of any crypto term, I think everyone has their own version, their own perspective. But for me, a lot of it is like taking what we have traditionally and how are we accelerating the time it takes to do anything. So if you want to think of a metric like time value of money, I think is a great metric to kind of put on PayFi. So what does that mean? So let's say I'm Worldpay today and it takes like a day for a merchant to settle their funds after you've paid. In sort of this PayFi space, why can't that be instant or near instant? So how do you get access to liquidity that allows you to do that? How do you get access to products that are 24/7, 365, that don't care about banking hours or public holidays? So we have things like stablecoins that allow you to essentially do that. When you talk about cross-border, it's, a company like Worldpay earns a lot of money from foreign exchange sort of swaps in between currencies and locations. With stablecoins, you're now starting to see that price can go down. Those fees can go down, but it also makes it a lot quicker, which means people want to do more business essentially with your company. So I'd say as a whole, if I were to define PayFi, it's like taking what we have existing in the traditional payments world and accelerating it because we're making it internet native.
Yeah, moving money now.
Yeah.
What about you, Mayank?
Yeah, I think I've been in the blockchain space now for 9 years, and I think the thing that interests me the most is the composability of blockchain technology. Being able to build on top of different projects and ultimately build unique experiences for everyone is what drives me and what makes me so passionate about the space. And so I'm a bit biased working at Circle, but I would say stablecoins, in my opinion, are very important in terms of enabling PayFi, allowing great partners and folks to build on top, building exciting use cases for everyone to experience.
Yeah, they're really becoming the backbone of the financial system now.
Yep.
What about you?
Look, I think PayFi is one of these new catch-all phrase words. I think what most people were thinking about was what Lily at Solana Foundation coined, which is like the buy now, pay never, which is like essentially, it's be a wonderful life. But I think it's like, you need these like radical claims, which just to explain to people would be that if you put your money into some internet native sort of yield, that yield would continuously pay off your credit, and so you can buy stuff with that internet native yield. And so it's obviously it's a crazy idea, but I think you have to have these sort of crazy ideas to push the boundaries of what new things are we going to do. The thing that I think about more so, just as a founder, is like, how do I build a company with a new set of experiences with as few employees as possible and as automated as possible? We have a fintech business, which I'll go into in a second, but we're also going to release a wallet product. And one of the challenges with a fintech business is that even if you do it more efficient than a bank, you eventually have to keep scaling people with that business. Versus I think the opportunity with PayFi businesses is that you can build this new way where everything across the stack is so automated, using oracles, a whole bunch of things, so you can actually build very, very lean financial services companies.
What about you, Charles?
For me, PayFi is a fairly new term that everyone's trying to kind of build a mental model around it. But my personal take is that, okay, stablecoins are a foundation piece. They have a clear product market fit, but ultimately you need to build experiences on top to make them useful for normal people. And that's where companies like Cas, companies like MiniPay are coming in to use this infrastructure and connect it to the existing payment system. Because if we build something in a silo that's not connected, then it's not going to be very useful apart from a few geeks, me being one of them. But we need to connect it all, and that's where I think the PayFi stack comes in and makes things happen for normal people.
Thanks. So Mayank, I'd love to hear from you, clarifying a bit PayFi's proposition in the crypto payment space. Where do you see the benefits of PayFi compared to stablecoin transactions or global payment systems in general?
I think the two things that excite me the most is really around programmability and the openness that blockchain technology enables. I think the programmability aspect is super exciting because this is the first time where money is able to be controlled by if-then statements as part of smart contracts. One of the use cases that I was most interested in when I first started exploring blockchain a few years ago was really around this notion of crop insurance, where farmers basically take out insurance policies to hedge against if it doesn't rain and things like that. And for me, I think it's really exciting knowing that if it doesn't rain, instead of a farmer having to wait months for a claim to be filled with an insurance provider, a smart contract effectively enables that to be handled automatically. And these sort of use cases can compound all across industries and use cases. And I think that as blockchain technology gets embraced more, that programmability aspect will be super interesting. Beyond that, I would say from an openness perspective, if anyone has been in the fintech space for a long time, there's been a concept where innovation happens kind of in walled gardens, where everyone builds their own ecosystem and tries to incentivize folks to stay within that ecosystem for as long as possible. And I think blockchain technology, especially permissionless technology, permissionless blockchains, really enable folks to move from ecosystem to ecosystem, driving extremely compelling and new customer experiences that were never possible before.
And these are super clear examples. I mean, the farmer getting paid instantly. It's like money now again. That's a recurring theme. Do you think that can scale globally? Is this what you're hoping for?
Yes, absolutely.
And the walled gardens, I mean, who knows, we may see also other walled gardens emerging in the crypto space or in the PayFi space. So let's see how the industry evolves. So now I'm interested in hearing from Ahmed. So you're really, as you described, you're working at the intersection of traditional payment rails. You're marrying these traditional payment rails with DeFi technology to build these PayFi use cases. So who is the user for that?
Yeah, I think there's like a lot of different users if you think about it. But if you think like our bread and butter business is like large corporate global companies who like want to be able to go around the world and accept payments in that respect. So I think a lot of when we view PayFi meeting DeFi or traditional payments meeting DeFi, we're having in mind when people say bringing millions on chain, it's like the millions of companies who are unlikely to go on chain first is like our customer base. So in that respect, like that is the focus that I have day in and day out is, okay, how do I make this more profitable for our merchants? How do I make this more accessible for our merchants? And therefore their customers also make it easy for them to go buy. So let's say you're Etsy or Airbnb, and now I'm a host around the world. By us, Worldpay, helping to enable crypto payments as sort of a payment method, suddenly it's like you can go around the world as a host and you can always get paid out or pay with crypto and receive your funds almost instantaneously. So in like that respect, that's like sort of a lot of the initiatives that I work on or my team works on. Where we're trying to get money quicker to the likes of like an Airbnb or Etsy, these kind of global companies, as well as their end users getting paid out much quicker, getting access. There was a talk on yield right before this, getting access to yield a lot quicker, making it programmatic where your money is like doing something for you almost immediately. And especially when you think of like high cost of capital, high interest rates, like money and time are like more interconnected than ever, where you really want your money to be put to use as quickly as possible.
And what kind of frictions do you face when you're integrating a new payment methods or like crypto-native payment methods into these traditional payment rails?
Yeah, I think there's stages to everything. So I would say we're still not at the stage where things are like fully seamless, I would say. But when you talk about friction, a lot of it is just education. So going to let's say British Airways as a company and telling them we want to settle your funds a lot quicker and give you access to high yield. But now you have to talk to every treasury management person within that organization to understand how am I going to start to accept a new form of sort of currency or asset. So I would say like education is still there. But in terms of like UX, I know that's like been a big theme for crypto for a while is improving the UX. I think it's like not terrible. So I think like that is no longer a big friction. And the products are like a lot more sophisticated than they have been in years past. So I think now I would assume this year is like essentially the first year where big companies will start to really move their funds more on chain or like try to grab some of the benefits of moving your payments on chain. So I'm excited for a lot of that momentum to continue being pushed.
And when working with airlines, you deal with a lot of legacy systems as well, or do you
interoperability is huge in terms of like it being a challenge. But again, it's because so much of this is programmable and open. I don't see that as being the long-term issue. I think most of it will be more on the human side of how do I change my organization to start to adopt this technology because of the benefits. And I think we're right at the cusp where those benefits might outweigh the actual cost of having to hire new types of people or retrain new types of people or reformat how I move my money internally. But I think it's just the gap will continually increase where that value is very much there, and you'll be sort of left behind or running a much more costly organization with too many people and not enough AI agents maybe. If you don't start to adopt it now or at least start to pilot what this might look like for your company.
And what's your take on user experience? Do you think that wallets are going to be the final frontier there, or are they going to be abstracted under other layers to replicate a more of a fintech experience?
I think it eventually will become sort of this AI agent model where there's very limited sort of interfaces that you require to get things done. So a lot of it might be just choosing the action path or desired outcome that you want, and then in the background it's smart contracts interacting with other sort of company APIs and even regulated bodies to kind of get those actions done. So I think like you probably will have wallets in the short to medium term, but they will be abstracted away as more interoperability enters the space and the less of a need of having sort of a separate wallet interface to get things done.
Thank you. That's interesting. Now I'd like to hear from you, Ragulan. Switching gears, talking about infrastructure under the hood. So as you've built Cast, Can you tell me about some of the infrastructure challenges that you have faced? Could be also user experience, scalability, and how you've gone about addressing them?
Yeah, I mean, look, as we're building Cast, just to explain, like Cast is underlying, we only hold stablecoins. We don't hold any cash, but we have partners to recreate that cash savings and card experience, which is the basic banking experience. We have partners who, like Bridge in the US, who give us virtual accounts so people can deposit cash and it comes to us as stablecoins, and they see USD, but actually, they've deposited cash, but what we hold is a stablecoin, a US dollar stablecoin. And we have partners like Visa and others who provide us with cards, right? And so the infrastructure we build is what we're building is like a hybrid bank. It's a mix of on-chain infrastructure, including custody infrastructure, and then also traditional fintech infrastructure, which is like Visa, et cetera. But the way that we're thinking about it from a roadmap perspective is that you have this hybrid bank, which has stablecoins and it has traditional cash. And then we're building a whole new on-chain bank, which is completely clean, which will start off as a wallet, but long-term will be an on-chain bank, right? And this is sort of like the way I forward track it in my mind. Like a lot of people in Europe would use Revolut or Wise or something similar. And these are sort of like, 10 to 15-year-old companies roughly. And they're looking at the people who use some other bank and go, oh my God, you've got a shit bank. You should use one of these, right? Because my favorite saying is banking is fucked, and it pretty much is. And so they're looking at the people previously who are saying, oh, you've got a shit experience, now we've got a better experience. And I'm looking at Revolut and Wise going, oh my God, that's a shit experience. Imagine what an on-chain bank will look like. And anyone who's got like young kids, a few years old, 2 or 3 years old, imagine in 15 years when they're like 18 years old, when like maybe 20 or 30% of the economy is stablecoins. They're going to come into a world where they may never have a normal bank, right? And the normal banks have lots of terrible restrictions, right? They tell you who you can send money to. They tell you who can sign up. They lock your funds. Then you got to call customer service, explain why you sent money to a crypto exchange. There's all this rubbish that comes, and then it depends on where your passport is, where your residency is. There's like infinite amount of bullshit that's being created just because of country-based regulations. But there is a new, better world where you've got this pristine on-chain bank, which doesn't depend on your passport, doesn't depend on your residency, and it will appear in the next 10 years, where you can do all the things you can do with a bank, which include having a cash account, a savings account, the equivalent of a card, which will be done as an on-chain payment with maybe something like a card, but it'll be done on-chain instead of via Visa or MasterCard. And then all the other things like stocks are going to be on-chain, crypto's already on-chain, there'll be lending on-chain, everything, right? And so I would dare say that most people, kids that are 2 to 3 years old now, will come straight into an on-chain bank world, which is probably very hard to imagine for us. But I could almost guarantee that half of them will and won't have, and they'll be paid natively in stablecoins, and they'll never really care about what the old world looked like. And guess what? They're also trading and giving money to people all over the world who are operating on an internet native economy, right? Whether they're influencers or whatever that is, they're selling goods, well, unless Trump keeps putting tariffs on, but that's the world that I'm excited about building about and the future of Cast. A pristine on-chain bank, which is decentralized and independent of people's passports or residency or anything else. But we have to live in this hybrid world as well, which is what we have today, for some period until the volume of stablecoins becomes significant. It's about 1% of M2 money supply now. That will rise to 10% or so. And then I think a lot more people can live completely on-chain.
That's a super exciting idea. So would you say maybe the under 30 generation right now, might they completely leapfrog the traditional financial system?
I wouldn't say it's under 30, because we employ people under 30 and they still have bank accounts, but I would say the people that are like kids right now, would have a better chance. If they're like sub 5 years old.
Yeah.
Because if they're sub 5 years old, then by the time they turn adult, it'll be nearly 2040, and I think the liquidity would be significant by then. I think we'll hit like $1 trillion of stablecoins by 28, 29, and maybe 10 trillion by closer to 2040. By that time, it's like half of M2 money supply, if M2 money supply stays the same. And so then I think the liquidity is big enough that we have a decent chance of people leapfrogging straight into an on-chain bank. But there'll be adoption along the way. It's just the leapfrogging bit, I think, is still
once payroll, once everyone's getting paid in that method, I feel like it's a natural.
Yeah, and we have like 70, 80 employees, and over 50% are paid through stablecoins. Majority, actually, 60, 70% are paid by stablecoins today. So there'll be more. We were born a year ago. There'll be more companies being born, and they'll just pay everyone on stablecoins because they'll be like, this banking thing is really difficult. So, but everyone can get paid instantly on stablecoins.
Right. I saw you mentioned your partners like Visa. Now I work in partnerships, so I see you have an amazing partnership strategy. You have also Solana, BitGo. When you make these partnership decisions, do you build around those, or do you also sometimes work with partners with a view of acquiring them or fully integrating them into your tech stack?
I mean, we acquired a wallet as a service company, which was small, but that was really to give us a lot more blockchain tech experience. Mm-hmm. But otherwise, you're basically betting on who the biggest partners are. And I would say the Solana ecosystem is just killing it right now. And so that's why we bet so deeply on them. Other ecosystems not doing so well, So I think for us, it's just like, what does our partner give us? We started with BitGo for custody because it gave us they've been around for 10 years. Not many crypto companies are around for 10 years, right? And so they give you a lot of credibility. And then Solana is just a pure number of users thing. They've got like really more active users than everyone else combined, And so if you're not building on Solana, whatever opinion you may have of different ecosystems, like they have a lot of users.
We're big Solana fan people too, yeah. Charles, so you actually live in the future in terms of the use cases that you're seeing. And can you tell me about the opportunities that you see from microtransactions to actually help drive financial inclusion in emerging markets?
Sure. So to me, I think the fact that this tech is global is really the kind of the key differentiator. Like if you take that away, none of that is very interesting in my eyes. And I saw it like with my own eyes when we were doing kind of user testing session in Ghana. It's like people start sending money to each other, like dollar stables with their phone numbers. Everything works. A few seconds later, they get it. But then when they start understanding that they can put any phone number there, French phone number, Dutch phone number, whatever, and it's the same experience, that's when like a light bulb comes up, and that's where they understand the power of this tech. So I think the global nature of this tech is really key. But then we also think that, and we're starting to see signs that, there's also efficiencies for very small amounts as well. Like typical kind of cross-border, even within Africa, cross-border companies would have high minimums for a given payment, but using stablecoin rails, non-custodial wallets means you can send fractions of a cent or fractions of a dollar, very price effectively. So I think the global nature, the lower minimums, but also connecting to the local ecosystem of payment methods, because every country has their own silo. And if you can create a stablecoin experience where you can use that same wallet as a stablecoin wallet, but also as a way to pay locally with whatever local silo there is, that's where really magic happens. And like if you go to Kenya, you'll see when you exit the airport, there's a long queue for the Safaricom kiosk, so that you can get a SIM card that allows you to use the local payment system called M-Pesa. Mm-hmm. But with MiniPay, you can just load up your stables and then, without any merchant integration, pay any merchant within Kenya or pay bills locally, skipping the queue and sort of staying kind of stablecoin native. So I think these kinds of experience are really, really show the power of this tech in a big way.
Yeah, you're really abstracting the complexity of the entire system in Africa. So now I'd like to talk about stablecoins a bit more intently. We have, Circle here on the panel. We have also Ragulan, who used to work for Circle. But Mayank, can you tell me, would you say that PayFi is the main driver for stablecoin usage at the moment?
I'd say it's a spectrum. And over the years, we've seen use cases go from very crypto native, crypto trading like use cases to as the technology becomes more and more mainstream and adopted to really becoming a mechanism for efficient cross-border payments, as well as hedging against local inflation as a store of value. I would say that as we look to the future, I would expect the trend to continue where crypto trading as a percentage of use cases for stablecoins continues to decrease, and ultimately the mainstream payment use cases continue to rise instead. I would just say there's been a lot of discussion on AI agents and things of those natures. As we look ahead, I don't think AI agents will be paying each other with debit cards, paying interchange and things like that. And so I do believe over time there will be these use cases where AI agents will have their own non-custodial wallet, that they will pay microtransactions in the form of stablecoins and things like that. And so I do believe some of these emerging trends will converge, so to speak, and stablecoins will be a fundamental building block for those sort of use cases.
So would you say stablecoins and PayFi are going to replace traditional payment rails, or is this more of a complementary layer in your view?
I would say both will complement each other, especially in the short and medium term, where ultimately our customers that want to convert their fiat into stablecoins ultimately need to rely on traditional payment rails around the world. At Circle, we are focused on globalizing our banking rails such that our clients can mint and burn our stablecoins with the fastest settlement times with local payment rails whenever possible. And I do expect this will ultimately continue. I think where stablecoins will really start to exceed the use cases for traditional payments is actually in between the traditional payment rails themselves, where ultimately you see faster payment rails ultimately rise all over the world, but there's no way to connect one another around the world that easily. And I do believe stablecoins will be that frictionless layer that ultimately allows folks to leverage the traditional payment rails, but also then be able to transfer value anywhere around the world as quickly and cheaply as possible.
Okay, so we'll still use SWIFT and ACH for some time then.
Hopefully less and less.
Great. Okay, now I'd like to talk to you, Ragulan. So your title on LinkedIn is the stablecoin guy. So what's your take on, you're building this super innovative fintech now. Would you recommend to other people in your shoes that they should create their own stablecoin, or should they work with the existing stablecoins that are around?
It's probably a good time to tell you that in like 6 hours we're launching our own stablecoin announcement. So, look, the thing is that firstly, the reason why I set up Cast compared to like building another stablecoin is because like there is really only 2 profitable stablecoins. The others are just wasting their time, and so I don't really recommend you build a stablecoin if that's your great business idea, unless you're maybe something like an Athena, which is making a lot of money, but that's kind of like a long, short hedge fund. The major reason for this is I worked at Circle, and people like massively underestimate. The biggest underestimation is how much network effects USDC and USDT have, like how ridiculously ingrained they are. And then people are like, oh, well, wouldn't you want some yield? And I have this saying, and the saying is that the people in stable coins have no choice. They're not there because they prefer it to banking. That's nice. It's a good thesis, and we like that thesis for now, and eventually that will be the case. But the majority of people there today have no choice because they can't get bank accounts, or they can't move money between countries, or they can't trade certain products like crypto without them. So a lot of people have tried, and pretty much there must be like 100 about to die stablecoin companies out there that were spawned because a lot of people saw the net interest margin of these 2 companies. And guess what? 5 interest rate cuts planned for this year. It's really hard to make money when interest rates come back to 2% or 3%. You need significant scale. Even Circle's struggling to be profitable with the scale that they have, as you can see by the S1. No offense, guys. And so, But so then you're going to ask me, well, why are you guys building a stablecoin? Right? Why am I launching a stablecoin? And so we're thinking about the stablecoin a little bit differently, and I think this is where you could potentially have a use case for a stablecoin. Our stablecoin is built sort of bottom up. Firstly, we're tokenizing all the deposits that people have that sits with us as stablecoins, so we can represent it on chain, right? So that people have certainty that what they're putting into a custodial environment can be non-custodial, and so that's the first thing. The second innovation that we're trying to build is that actually stablecoin interoperability has long been talked about, but we're essentially building a wallet and a swap service so that you can deposit USDC, USDT, and it would swap into USDK. Imagine USDK is a bucket of USDC, USDT, and treasuries all in one. And we use a lot of the interest earned to essentially pay for the innovation of that you don't need to do this swapping and bridging and all of that. A dollar is a dollar, right? And I think actually one of the biggest problems with stablecoins is this multi-chain, multi-stablecoin. It's meant to become simple, but it's actually become really complex because it sits as so many different things on so many different chains. And so we're building a stablecoin that's like a decentralized stablecoin that's a sort of essentially like a protocol built into one to fix this interoperability issue, not for the sake of building another stablecoin. And then eventually we'll build an L2 or something similar, a smart contract platform, to replicate payments. Because there's two things about stablecoins which are really ugly. One is the interoperability issue, which I mentioned, which is like too many stablecoins, too many chains. But the second thing about stablecoin payments is that they're dumb. And no one talks about this. But most people are like, oh, they're so good because you can send it to somebody and it just gets sent. But you can only do that. And actually payment systems, as much as you want to bash Visa or MasterCard, they're actually really smart. There's a lot of smarts built into them. You can do a pre-auth, you can do a decline, you can do whitelist, you can do a reversal. You can't do any of that with a stablecoin, right? And so that limits the use case of stablecoins to be a real replacement for payments. And for that, I think there needs to be new innovation around potentially a chain or something like a chain to build what you can do with Visa. Like you get into an Uber, it pre-auths you $30, and then the ride is $23 and it gives you back $7, right? You can't do that with a stablecoin payment. Or you can't put down money at a hotel and they charge you extra for when you raid the minibar, and you don't raid the minibar, and so then they give you the money back, right?
Pre-authorization.
Yeah, pre-authorization, or whitelist so you don't take money from dodgy people, things like that. And so if anyone's thinking about building a stablecoin, don't. It's my simple estimation. It's a quick way to go broke. And you need a minimum of $2 to $3 billion of stablecoin market cap before you can make it profitable. Once you take the NIM and then you look at how much rev share you have to do and how much compliance and everything else you need to do, minimum to break even. And almost none get there. But if you're building innovation around how stablecoins interoperate with each other and what we can do with payments, that I think is very, very interesting. By the way, over the long run, if you build a bank on top of the stablecoin layer, you're going to be, which is what we're trying to do. My thesis is, crazy compared to a big company like Circle where I used to work, is that we'll be way more profitable in the long run because we can manage the whole ecosystem of a customer, of all the things that they do, not just the layer, and eventually we can just swap out the stablecoin. Like we will own the customer and we'll own the customer balance, so we can sell them credit, we can sell them cards, we can sell them payments, swaps. We can earn in many, many different ways. There's the stablecoin infrastructure players, they don't own the customer. They're just a layer that can get swapped out. So that's my view, no offense, man. But we used to work together, so we're good friends.
Thank you so much for sharing. So you have a scoop now from this session. Thanks a lot. Now I'd like to talk about yield, and I wouldn't be doing my job if I weren't talking about yield now. So you mentioned you're also building a savings account experience. Yeah. What are your thoughts about yield? Like, are you thinking about yield in a CFI way, in a DeFi?
Well, we have two, because we're actually partnering with M0 Labs, if people have heard of them. And so they have a treasury-backed yield, which we will have two stablecoins. USDKY will have the yield, the treasury-backed rate, 4.25% roughly right now. So I think this is interesting because like I've got a bank, everyone's got a bank. The bank does everything it possibly can to stop you from getting a high interest product. At least in places, maybe in Europe it's easier, but in other places, it's really hard to get just like the standard bank rate. And so I think stablecoins, treasury backed, are interesting for that reason. But I think also just like earning a DeFi yield on when people are essentially lending out those stablecoins for other things, but that are secure, so you can earn an even slightly higher rate. I'm not talking the crazy 20% stuff, but maybe instead of 4%, you earn 6 or 7%. I think that's definitely interesting. And part of us having a wallet is so that we can add DeFi yields to stablecoin DeFi yields to that wallet, so people can swap from the base stablecoin, whether it's us or USDC or T, into something like an Aave rate or something similar to get a better rate, an internet native yield rate that's powering DeFi.
And going back to our previous conversation, are you thinking of doing it with infrastructure partners or doing it yourself?
Yes, we're doing it with Kiln. Sorry, did I not lead into that answer? Okay.
Thanks.
Yes, I highly recommend that you do it with Kiln because it's a lot easier instead of having to build it all yourself. Is that a sufficient answer?
I'll consider it. Thank you.
Okay, cool.
Thank you. Okay, so super interesting, thanks. So now I'd like to talk about something a bit different. So security, compliance, and trust, because these are also really important dimensions in building a payment system. And I'd like to talk to Ahmed about this. So you're working for Worldpay, so you know all about traditional payments, traditional fiat payment rails, and they're pretty great, right? I mean, you're a pretty successful company.
I mean, Worldpay does $4 trillion in volume. It's like bigger than sort of any ecosystem does today in crypto, which is kind of like, and it's safe, I guess, or people trust it. So I guess when it comes to regulation, a lot of it now comes down to what does that look like in the future? How can you make on-chain payments safe? But I'll let you finish your question.
Oh, well, yeah, good question. So, like, do you think PayFi is now outperforming traditional payment rails, or are they still trying to catch up?
I mean, on a volume basis, no, it's still catching up. But in terms of like time to market, you're seeing products launching all the time, where I think in traditional payments it was a lot slower, where you would see fintechs come out of the woodwork, but not at the pace that you're seeing it today. And I think a lot of it is the excitement of how open source this technology is, the increasing amount of interoperability. You're starting to see use cases all over the world, from Ghana, Kenya, all of these places where, being a fintech was not as sexy or maybe much harder to penetrate. Today you can kind of get there. So I think the pace in which PayFi grows will be a lot quicker than we've seen sort of traditional fintech or even traditional payments grow.
Great. Mayank, so Circle, you're really a leader in the regulated digital finance space. And so obviously security, compliance, regulation are paramount to you. And so how do you integrate these considerations in building PayFi experiences?
We're focused on building regulated dollar-denominated and euro-denominated stablecoins. And when you think about the use cases that I spoke about previously, someone may be wanting to hedge against local inflation by holding one of these currencies. It's really that trust and transparency that allows someone to be able to do that without losing sleep over if their assets will go down or anything of that sort. So from that perspective, we really believe at Circle that having a regulatory first approach, as well as building trust and transparency with users, is ultimately the way that stablecoin adoption can continue to proliferate.
So you're really building on your role of being a trust anchor in all of the...
We believe it's fundamental for stablecoins.
Thanks. Look, we're coming to the end. I'd love to have a few final thoughts from a couple of our panelists. So, Charles, as I mentioned, you're living in the future right now. You're really at the forefront of PayFi innovation. Can you give us a few real-world examples where you see concrete impact on the ground in your market from PayFi?
Yeah, I mean, some of them I mentioned already, but I think the global nature of it makes cross-border payments easier. We've seen real tests of, for example, Europe to Malawi, which is very much an underserved corridor, where people can save up to 50% on the end-to-end fiat-to-fiat rail. so using MiniPay. We've seen examples of people remotely paying bills also from, so for example, if you're in the US, you want to pay a bill in Kenya, you can do so directly. So instead of sending a remittance and then having this uncertainty around how the money is spent, you can pay directly and know that, okay, this is going for electricity, this is going for food. So that kind of use case we've seen, and also this kind of global traveler wallet use case we're really excited about. And when we go to kind of Web3 events, people really, that resonates with them because they travel a lot, and then they have stables, they're in a bunch of wallets, but then they need one that is really focused on using these stables. And so we're pretty excited about that kind of traveler use case.
Amazing. Thank you. So, Ragulan, I'm going to give you the final word. What's your vision for PayFi in 2026? How far will we have come along in a year from now in terms of PayFi adoption in global commerce?
Yeah, I think it's more than PayFi is. If I'm just honest about it, it's very dependent on stablecoin adoption.
Yep.
So I think the most exciting thing is that in the last 3 months, crypto prices have gone down and stablecoin market cap has gone up. And that hasn't ever happened, that breakaway hasn't happened in any significant form before. And so I think what will happen is that one of the issues with PayFi or even DeFi was that it was limited to this sort of like early adopter use case, for maybe borrowing against Bitcoin and other things like that, right? But now you're going to have this breakout of stablecoins, and they're going to march towards $1 trillion globally. And I think what's going to happen is that you actually will have the market, so you can build, like the examples that Mayank used before or others, which just kind of seem like edge cases. But what you need is enough people having stablecoins so you can actually do these things, what you guys are doing, for example. And so I think this year is the beginning of the breakout of stablecoins, and with that will come PayFi. And I think you're going to see a wave of innovation of companies coming up with new credit models or new insurance models. And the promise that we've had for just a really long time, I think, I dare say it because every time someone says moments now, it doesn't happen. But I think the moment is actually coming now, where the next 5 years will be very good for PayFi and DeFi and stablecoins in general.
Thank you. Thank you, everyone. Thank you for the panelists.